If people are like, oh, 30, mid 30s is high silver. Well, after you adjust for inflation, it really isn't. So let me separate things. You asked specifically, what would it take for silver to hit a new all-time high?
Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and this week we got not only another leg up in the price of gold, finishing above $2,720 an ounce, but we finally got the long-awaited breakout in silver, and price rose so significantly on silver that we not only blew past resistance at $32.50 an ounce, but we are now testing $34 an ounce. So, to all the naysayers out there, the people who told me in the comments of my videos that silver would forever be $20 an ounce, I am here to say today that what I have been saying in my videos since 2021 is in fact coming true as we move towards my 2026 price target of $60 per ounce on silver, which again I first revealed here on YouTube in 2021. Now, what this also means, and I've put it up here on the screen, is that silver, which I said was poised to outperform gold, I have been saying that in past videos, is now doing just that. And although I am against using 2 moments in time to measure investments, because I believe in the dollar cost average method of measuring the validity of an investment, I do think it is interesting that silver on a 5-year scale is now up 99%, more than even the S&P 500 if you exclude dividends. And I know there are premiums we have to account for, but the point of me showing this to you all is to say that silver is finally proving many of us right. And in my opinion, we're only just getting started. Now, in anticipation of this move, because I have been expecting this to happen for a little while now, I thought it was a good idea to sit with an expert and discuss a few topics as they relate to gold and silver. And I had the pleasure of sitting with Mr. Lobo Tiggre on Thursday, and you can see his profile here, and we discussed the following: higher gold prices and a rising dollar index. Does this mean we're seeing the early signs of a flight to safety? We discussed money printing. We discussed what signs gold is sending to investors and economists. Then we moved on to the topic of silver. We discussed the all-time high for silver and if we will see a new one soon. We also discussed long-term opportunities of precious metals versus investing in things like nuclear energy associated with uranium. We discussed how gold and silver are becoming very expensive and if it makes sense to seek out alternatives like platinum and copper as alternative physical investments in the face of rising metals prices. And we finished the video off by talking a little bit about mining stocks and whether or not it makes sense to focus on the big miners right now or if he sees more opportunities in the junior miners. So please stay tuned for the entire video because it is a great one. Now, just before we jump in, I want to remind all of my American viewers that Summit Metals is becoming the #1 place for gold American Eagles, and they are currently available at the prices you see on the screen, so please go to www.summitmetals.com for great products, great prices, great service, and of course, free educational articles written by yours truly with great information to help you select the best products according to your needs. So Lobo, this is our first time chatting here on my channel, and I hope it goes well so it won't be the last. Over the last couple weeks, we've seen a strong bounce from the US dollar on the DXY, which measures the strength of the US dollar relative to other currencies. Now, at the same time, when we may have expected a pullback in the prices of gold and silver as they usually come down when the DXY goes up, we have in fact seen them go up together. So my first question to you, Lobo, is this: do you think this is an early sign of a flight to safety by institutional investors, which may indicate an incoming stock market crash? Or do you think it's a sign of something else?
Well, several threads to pull apart there. First and foremost, though, the DXY or any direct measure of the dollar does not correlate very well directly with gold. Markets are forward-looking. So historically, since 1971, when gold was freed from the dead weight of the dollar, you could say. The number one predictor has been real rates, because it tells you theoretically where the dollar is gonna be. Skate to where the puck is gonna be. So it's not so much about the daily wiggles, but where the markets think the value of the relative currencies, and I think gold is money. So I do see it as a forex trade. When you see gold and the dollar move together as they did recently, it's usually not about that. It's not about the markets or finance or the economy. It's usually some, as you hint, a flight to safety kind of that drives people into both. And for both to move together, it's usually not a financial flight to safety, like you mentioned, potential economic trouble, but more like the war in the Middle East. So to answer your question, there's sorry, it's a bit complicated. There's more than one thing going on. But no, I don't think it's big money getting ahead of U.S. recession. I am on team hard landing, but we can come back to that. I do think that it's partly the central bank gold buying that we've seen, very strongly supportive around the world. But more than that, I think the patterns that we've seen over the year suggest to me that if you've ever spoken with Rick Rule, he's probably told you about how over the last 4 or 5 decades, the global average allocation to gold in portfolios worldwide is around 2%. Not, crazy gold bugs packing bricks up to the rafter, right? Just 2%. But that recently, that average has been around 0.5%. Like, people just don't get gold anymore. It's a barbarous relic, a pet rock, has taken over that perception of mainstream finance. Under the right circumstances, though, people will see the errors of their ways, the scales will fall from their eyes, and so on. And Rick has been saying for some time that, we don't need to have some crazy mania where everybody becoming gold bugs, but just if the world reverts to mean, that would imply a 4x investment demand for gold. I don't know that it needs to revert to mean, even if it just goes halfway back. If it only goes to 1%, that would double investment demand for gold. And in a world such as we have today, we talked about geopolitics. Sorry for the long-winded answer, but this is the answer. We have 2 hot wars, either of which could literally become World War III. We have all kinds of trouble on the economic side. The global economy is clearly in trouble. The heart of Europe, Germany, is in major trouble. Everybody is, I think, in denial about the actual state of the U.S. economy in an election year. Go figure. But there are signs of trouble. We just got manufacturing industrial numbers out, all negative today. So, despite the happy, happy, joy, joy narrative, it's not true that there are no red flags in the U.S. economy either. So I think in a world like that, you've got geopolitical trouble that's not going away. Ukraine's going on over 3 years, right? And now this thing in the Middle East is not going away. And it looks like, Israel's going all in. That's a world in which I think not just gold bugs, not just metals traders, not just, people on the COMEX or the LME. I think deep-pocketed, not just central banks and sovereigns, but deep-pocketed big money around the world is looking at this and saying, maybe a little bit of gold in my portfolio, don't need to go crazy, just 1%, might not be a bad hedge.
With inflation now reaching levels below 2% in many developed economies and approaching 2% in the USA, even though we know these numbers are bogus and real inflation is likely much higher, as we've seen, by the way, in a recent study that I saw released suggesting that inflation under the Biden administration is 2 times higher than it has been stated. My question to you is this: do you think central banks are going to use these official figures as an excuse to start quantitative easing again? So basically printing more money and injecting it into the system. If so, how do you think this will impact asset prices over the medium and long term? And I would specifically like to ask about precious metals and the stock market.
Wow. Okay. Well, hold on.
No problem. No problem. I'll edit.
No, don't edit. I've got an answer for you. Okay. Where do you want the answer to be? I keep saying on these interviews, I don't have a crystal ball. So I got one. I can answer your question now. I'm joking, but this is in a way kind of serious because, what are the central banks going to do? Despite their protestations of independence and so on, they are politically created entities. And most of them have a lot less gumption than the Fed when it comes to standing up to those who appoint them and so on. So it's, you know, but I think there's an important thread here to keep in mind, and that is, as a hard money advocate, I like the idea of deflation. I like the idea of my cost of living getting cheaper, lower prices. What's not to like about that? Well, what's not to like about it is how we get there. If we get there through productivity increases, things are cheaper because we're manufacturing so much more efficiently. Our costs are going down and we can pass those on to consumers. That's great. Cost of living is going down. But if inflation as mismeasured by the government is going down because they're throttling the economy, which is what they think they have to do, that's modern economics. We control inflation, which has nothing to do with money supply. We control it by throttling the economy. So if they're succeeding, then they're throttling the economy. If they're over succeeding, if they've gone past, and this is a Jeff Gundlach thing, you can't take 9% inflation and crash it down to 2% and expect it to just stop there. Right? If you're throttling the economy so much that it slows, despite the money printing, it slows anyway, and the inflation goes down, then why on earth would you think it's just going to hit 2% and stop right there? So it's interesting to me that we're seeing so many of these measures, Canada, England, other places where Europe just now, it goes right through 2%, keeps on going down. So, crystal ball and all, I don't know the future, but yeah, I do think that there will be a wholesale pivot here. They're already cutting. They're already, the ECB cut again today, as you and I record at any rate. So they're already responding. Now, do they add QT to that? I don't know. But would I be surprised? Absolutely not. I think they've done enough throttling that they've done more damage than they would admit. And the consequences of that are to be seen. And they will, what's their toolkit? If cutting interest rates is not helping the economy fast enough, well, from the central bank perspective, balance sheet expansion and that sort of thing is the next go-to thing.
Lobo, many market analysts keep repeating the words, gold is sending us a message. And that message presumably relates to the stability of the market, unsustainable private and national sovereign debt levels, as well as the long-term status of the US dollar as the global reserve currency. Is it possible, Lobo, that we are in the early stages of a market melt-up that some have been calling for, that 2022 was in fact the bear market for stocks, and that it would be a mistake to take a defensive position right now and be out of the stock market?
Short answer is yes, certainly possible, but I don't think that's the signal gold is telling us. Gold, people like to say, I mentioned that gold and the dollar don't correlate closely on immediate terms because the markets are forward looking. Well, not just markets, but investors, people in general, they look to the future. What are my inflation expectations? How do I feel about my job and my likeness? These are forward-looking, if not predictions, then, decision-making based on what's coming. So where I'm going with this is that gold tends to lead inflation. If you do a straight correlation with gold and CPI, it's terrible, almost non-existent. But if you lead it, like 2020, we have, pandemic, whatever the reasons are, we have gold goes screaming up to 2000, but it's not right then that we see inflation go to 9%. It took a year or two for that to happen. So, gold has really pulled a hockey stick this year. That is telling us something. Now, is it that's a market melt-up? I don't think so. There are market melt-ups without gold doing that. I think the main thing is that gold is money. And gold is telling us something about fiat, particularly the number one comparable, the US dollar. So I think gold is signaling that we're going to see a lot more inflation ahead. The beast has not been tamed. The victory dances of team no landing, team soft landing, they're premature. And, So I think that's what gold is signaling. We'll see if I'm right or I'm wrong about that, but that's my take on that.
Now, a lot of my viewers are interested in silver, Lobo. Maybe you've caught on to that fact already. Anyhow, with gold making new all-time highs being driven by its status as a tier 1 asset, the fact that central banks are buying like no time ever since the collapse of the Soviet Union, what do you think it's going to take for silver to make a new all-time high? Is that moment close to us, or do you think there is some irrational exuberance surrounding silver and its growth potential right now?
I'm very pleased to see that this year silver has started acting as more as a monetary metal should. It's been tracking gold more closely than copper. Then you might say, well, that's a no-brainer. Silver and gold are highly correlated. They're both money. Yes, I know. But last year, silver was tracking copper more closely than gold. And over recent years, if not decades, silver has taken on an increasing industrial use case. Now, this is a mixed blessing, you could say, because that industrial demand is variable. And when it goes away, that does impact the silver to dollar exchange rate, if you will. But what the market taketh away, it also giveth. So when there's higher industrial demand, silver can move up even when gold isn't. The perfect storm is when there's, for silver, is when there's safe haven demand that boosts monetary metals, and there's a supply scare, like bad economic news could do this. And silver, not only is it in itself partly an industrial metal, its number one sources, or number 1, 2, and 3, are all industrial metals. Silver comes, the lion's share comes from big copper mines, these big giant porphyries that have a silver credit, and the rest, biggest comes from lead and zinc. So if demand, and make no mistake, even a pure silver, there's no such thing as a pure silver mine. The purest would actually be maybe silver gold, but the gold would still be a significant component. But most silver comes from, as I say, copper, lead, and zinc. And those metals are important. If it's coming from a copper mine and copper goes down, that silver is not coming to the market. They'll stop mining. If it comes from lead, zinc, the silver might be worth more than the lead and the zinc, but the lead and zinc still matter. If the lead or the zinc makes up 30 or 40% and those prices crater, then that's a huge hit to your margin. So even if silver is doing well, you can still have a problem there. What I'm saying is this perfect storm is when you have some scare, some safe haven demand for gold and silver, monetary metals, but the same thing, it's economic, is putting a squeeze on supply. And then when you see that, we saw this in 2010. It was what happened partly with the Hunt brothers too, way back in the day, which I participated on as a kid at the time, right? You see this perception, oh, there's going to be a shortfall of silver supply at the same time that investment demand is kicking up. And that's when silver goes nuts. That's when silver went to close to $50, both previous cases. So I'm getting long-winded way to answer your question. What would it take for silver to see a new all-time high? I think a circumstance like that could do it, or almost certainly would do it. If we had a circumstance like that, where there was high demand and supply was seen as constrained, it would break sort of the laws of economics not to see silver soar. And bear in mind that that's just a nominal high. We haven't seen a nominal high yet, really, in all the cycles here that we've been through recently. The real all-time high, using the government's figures, never mind shadow stats of what the real inflation number is. If we just use CPI as a conservative case, the last time I looked, the real all-time high in silver would be over $200. It's not a prediction. I'm just saying, if people are like, oh, 30, mid 30s is high silver. Well, after you adjust for inflation, it really isn't. So let me separate things. You asked specifically, what would it take for silver to hit a new all-time high? Depending on whether you mean nominal or real. Nominal, I think that's within reach just of regular market fluctuations. Real, it would probably take one of these, perfect storms where you have demand picking up and supply constraints at the same time. My outlook for silver going forward is bullish. I am a little hesitant to put more money into silver stocks ahead of what I think of as recession denier capitulation because of the industrial side. That's not a bear case for silver. That's more of a I don't want to call it market timing, but it's more like the odds seem to favor a buying opportunity or potential buying opportunity ahead. So what's the rush? So let me see if that happens. And if not, I think there's still plenty of upside. The good news is after the recession has done its worst, or I've been proven wrong, team no landing is right. Happy, happy, joy, joy. Either way, we're looking at a reflationary boom, and that's very bullish for silver as an industrial metal, and it's bullish for silver as a monetary metal in that inflationary environment. So I actually really like silver a lot going forward. My concern is merely near term.
So, Lobo, considering your background in commodities, and I have to say it's a very impressive one, and you have a very impressive track record, and I encourage anyone watching right now to check out Lobo's website, which is independentspeculator.com, to see exactly how robust his knowledge is and what he's offering there. Anyhow, many YouTube personalities that talk about gold and silver are so laser focused on the topic that I think they miss out on other opportunities at times. And that doesn't mean I don't like gold and silver. Obviously, I do. I talk about it so much, and I have a lot of my net worth allocated to it. But it means sometimes we have options as to how much we allocate to them. Now, two of my Patreon members, Martin from the Czech Republic and Scott from the US of A, wanted your take on how to compare the long-term benefits of owning precious metals versus another commodity you know very well, which is uranium. Because with tech companies openly announcing their needs for energy, and nuclear obviously poised to play a big role in that, Lobo. I mean, Google, by the way, just announced that they are going to develop small reactors for their energy needs. What do you think is a better long-term hold?
Well, he also said long term.
Long-term, 5 to 10 year was
So
the kind
that's
of
tricky. As a class, I would probably still go with gold and silver because uranium is not rare. High prices eventually probably will cure high prices. There's quite a bit of it around. It's a byproduct in some cases too that's just not recovered because it's radioactive or difficult and so on. But there's tons of it out there. The problem is not that there's not enough uranium to supply even vastly increased demand, because it's so efficient. It takes this much uranium to power the average household for a year versus how much oil or coal or whatever. The problem is permitting and mine construction, getting all this. This is sort of interesting, conceptually. The beauty of mining is that it's an industry that naturally builds moats, because a price goes up and you can't just turn a mine on the next day. You can't just discover the deposit the next day, right? It's like these things take years and years to permit and build, let alone make the discovery. So when prices get ahead of the supply, then you can see, a real squeeze that is a thing of beauty on the stocks. And I do think we're headed that way for uranium. Uranium is already, even though it's corrected from over 100 to just over 80 now, that price is still enough to incent new mine development, which is happening. But I don't think that low-hanging fruit that's being picked, the projects that were already there or the mothballed mines that could be brought back online, I don't think that will be enough to meet the demand. Now, Mr. Market isn't clear on this yet. That's my thought. That's not the generally accepted wisdom out there. And I think this is one reason why uranium did correct so much and why it's taken so long to come back again. But for what it's worth, my forward-looking statement here is that I don't think the low-hanging fruit that's being picked will be enough to meet demand. And the squeeze, even though the price right now is enough to incent new production, will likely send uranium prices substantially higher, whether they need to go there or not, right? They will, just because people got to have it. As things are now, I see supply constraints probably lasting 10 years. But, that's all things being equal. All things are never equal. Things change. Whereas monetary metals, that is one thing that doesn't change. Debasement of currencies, fiat currencies, the race to the bottom, I don't think that changes. It might speed up, it might slow down. Which fiat is winning or losing that race, that changes. But the reality is that all fiat currencies are being debased, and that is good for anything that's real, physical, in comparison. It might be good for digital assets as well, but I don't know. I do know that thousands of years of history say that real money does well compared to funny money. And one final point on this, if you want to look at the big picture, I think the single most important chart you can look at is a long-term chart of gold since 1971, when it was free to exchange against the dollar, and the value of the dollar since then. And it's a giant X. Like, this is 70 years, and it's a giant X. And I really think that tells you all you really need to know on a big picture basis. Now, of course, that doesn't tell me where the exchange rate is going to go this year, or maybe even the next two for my investment. So I need to look at what trends are happening now. But in terms of basics, in terms of what's going on, what's real, X marks the spot. It really does in this case. And that is not something I expect to change. I think it's part of human nature.
Well, I think that's a great segue into the next question, because it's clear, at least to me, and especially in the case of gold, that it's becoming almost unaffordable for many people to save their wealth in physical precious metals these days. And I've covered it in a few videos recently. And as a result, people are seeking alternatives, Lobo. Many people who used to buy gold are turning to platinum because they see it as an affordable alternative that is also rarer than gold. So potentially having price upside for that reason.
I hate the term precious metals. What does that mean? Well, precious. Oh, my precious, my precious. Well, it just means they're expensive. A metal being precious doesn't make it monetary. It doesn't respond to this. If rhodium is expensive, you're never going to have a rhodium dollar. You're not going to spend rhodium for a loaf of bread. And it's not going to happen, right? It's not a monetary metal, and it's going to move differently. These are industrial metals. Platinum and palladium are industrial metals. And despite Paul Krugman wanting to mint $1 trillion platinum coin to pay off the national debt, it's absurd. That is absurd. But platinum, if you look at it, just look at the data, it is an industrial metal. It moves, it shadows gold somewhat, but on the, step back from the daily or weekly fluctuations and look at the monthly or yearly charts. It clearly moves with industrial commodities. It does not respond to monetary constraints or the exchange issues that we've been talking about for gold and silver. Now, does that mean it's bearish? Not necessarily. I mean, right now, because I'm in team hard landing still, yeah, my outlook for industrial metals is negative. Under the right circumstances, I could absolutely see getting into platinum and palladium again under the right circumstances. But that's not where we're at now. And I think this is really worth stressing, because there's a lot of people who I swear this happens at least once a month, if not every week. I get some message on X or an email from somebody saying, well, platinum is 20 times rarer than gold and it's half the price. It's way oversold. It's got to go up. And there's a logical appeal to this. But you could have said the same thing last year, the year before that, the year before that. It's been more than 10 years. So the fact that something is oversold does not mean it has to go up. Even if that's true, even if we say it has to go up, I'll give you that. Let's say it has to go up. It is, after all, something real. That doesn't mean it has to go up now. And it doesn't mean it has to go up in time for your in speculation. Now, if you want to stack platinum, by the way, and say, okay, I don't care about whether it goes up or down in the near term, longer term, it's going to go up. So I'm going to stack some platinum to diversify my gold holdings, and that'll be good for the long term. Well, I disagree with that. In the first place, why do you need to diversify from gold? It's not like gold doesn't even tarnish, which silver has an issue with, right? If you need to liquidate it, everybody can identify gold. It's yellow, right? Whereas what looks like platinum? Well, silver, palladium, platinum. I can't tell the difference just by looking at them, but silver is a lot cheaper. Nobody's going to sneak me a silver dollar and say, oh, this is platinum. I'd ask for more. But could they substitute something else silvery for platinum? Sure. It could even be solid silver, and I'd still lose money buying at platinum prices. I'm just saying that, other silvery metals, there's no point in stacking those. Like, if my reason is long-term saving, or let's say we go Mad Max, right? the internet crashes, you can't spend your Bitcoin, and we're dealing with barter and we're dealing with actual commodity money again because that's what works. And some guy comes up to me and says, Lobo, I want to buy your used car and I've got all this platinum here. I don't have an assay lab on my bench. I don't know if that's platinum. I don't know if it's palladium. I don't know if it's silver. I could probably tell if it's tin. I could certainly tell if it was aluminum. But you know what? You hear what I'm saying? Like, so these things are not, in my view, stackable. I see zero reason to stack platinum and palladium or anything else. Gold and silver are the
Does
only
the
things
same thing apply to copper then for people who are on a budget buying silver and saying, I'm priced out of silver now, I'm going to stack physical copper? Do you think it's the same thing?
Yeah, copper is even less convenient than silver. It's much bulkier. It also tarnishes. It turns green. It's an industrial metal. It's not something to stack. You can fill a garage with copper, and that's you're going to take a wheelbarrow of that down to the store to buy something significant. If we, and by the way, if we don't go Mad Max, there's absolutely no reason for copper or, sorry, silver fans, silver to go back into circulation as money, even if gold does. Blockchain solves that. If you need to spend 1/100th of an ounce of gold, you can do that safely and securely now. This is a solved problem. Like silver circulated to make change from gold because even, you couldn't make a gold coin too small. You'd lose it. If you made it the size of a flake, it might fall out of your coin purse back in the day, right? So silver made change for gold, copper made change for silver. That's not necessary in a modern economy, certainly not with distributed transferable assets. So, okay, maybe in a Mad Max scenario where there's no internet, sure. And that's one reason why I stack physical silver in case of the worst. But unless the worst comes to worst, I do actually expect gold to go back into circulation, not as coins in my purse. People aren't going to go around with medieval coin purses anymore. But I do expect gold back, verifiable, solid digital assets to go into circulation and be able to, like what the folks at, what was it, gold money. No, not them.
The Perth Mint were doing something like that as well.
There have been several attempts, and the
Anyhow,
governments keep
and
shooting
I'm
them
with
down.
you on that, by the way.
But
And I think it
eventually
could be
that
multiple
happens.
currencies.
All I'm saying is, gold grams. Who was it who was putting out gold grams? Right. Well, what if you need 1/10 of a gram? Like in physical, that's the problem. But the physical constraint is no longer there. So no, I see no reason to stack copper at all. But by the way, as a speculator, I love copper. The supply constraints on copper are much more intractable than uranium. And these big copper deposits are hard to find. They're getting hard to permit. It's not radioactive, but you make a giant hole in the ground, and nobody wants that in their backyard anymore. And oil, despite the Stop Oil Now, folks, I mean, it's going to be, I don't know if we'll ever stop burning oil, but if it happens, it's going to be many decades away. So if you want to diversify, I wouldn't diversify what I'd stack. I'd diversify what I speculate on. And then, when the recession has done its worst, or if I'm wrong, it's happy days again, I think both copper and oil are absolute no-brainer diversifications right now.
Lobo, it's been an amazing conversation so far, and thank you so much again for coming on my channel. I could probably sit here and talk to you all day. Anyhow, I do have one more question for you before we wrap things up here. Many of my viewers, in addition to owning physical gold and silver, have exposure to mining stocks. Now, I turned bullish on mining stocks last July when I saw inflation losing steam. That doesn't mean that inflation stopped or went away. It just was losing steam, especially in the price of oil. And metals prices, I saw, were poised to make big moves up. My final question to you, Lobo, is this. For people getting started in the miners, looking for a little bit of leverage in the precious metals market to earn a little bit more than simply the return that they're getting on their gold and silver, do you think it's best for them to focus on the big miners like Newmont, or do you think investing in junior miners is where people should be?
I have my own version of the barbell strategy. Nassim Taleb's barbell strategy. It's a brilliant concept, and I see that in mining. You look at sort of the mid tiers, and they're not as mobile. They don't give you that hockey stick potential of the juniors, but they're not as solid as the majors. They don't have as many assets. If they're a one asset producer, or maybe 2 or 3 assets, and one of their major assets gets nationalized or has a mine disaster or something. You've got a lot of the pain of the juniors without the stability of the seniors, but without the gain potential of the juniors. So I don't like the middle of the road unless it's a takeover target. So my barbell strategy is to buy a bunch of juniors that I see hockey stick potential in, and then anchor that with some of the majors. When they hit cyclical lows, it's as close to a sure thing in speculation that a solid mining house that's at, it's not its fault. The market's down. It's near cyclical lows. You buy that, and it'll go up when the market recovers. That happens all the time. So that's my version of the barbell portfolio. As for names, no, I never do that. Don't take it personal.
No,
It just
it's okay.
I think it's unfair to paying clients. And for the audience out there, I'll tell you, remember what they say about the internet. If it's free, you're the product. So free stock tips, beware.
So where can my viewers find the ones that you think are interesting? Maybe this is a great moment to mention that. I understand at the Independent Speculator at your website, they can find and sign up and find, the things that
Sure.
you're offering,
Well,
correct?
thanks for that. The Independent Speculator, our flagship publication, it doesn't just disclose which ones I might have a conflict of interest in. The central value is my personal portfolio. That is my portfolio. It's not just some overlap. That's the entire thing. I show you exactly what I'm doing with my own money. But there's an easier way to get into this, and it might be enough for what a lot of the audience needs. I mean, an audience that listens to questions like you're asking, this is not newbies. These are people who have some idea why they're here. We have a service called My Take, which really isn't a newsletter. It's a database of almost 1,000 resource stocks and growing. I have a whole team that helps me with this. And we evaluate, including boots on the ground, rock hammer in hand. We evaluate these resource stocks, and they get a clear thumbs up or a thumbs down, and why. And we update the database every month. So, and it's affordable. I don't want to call it cheap because it's a high quality product. And in fact, I'm thinking of raising the price when the new website goes live with some new features we're adding. If I do say so myself, or I hear it from clients all the time, they sign up and they're like, oh my God, I had no idea. This is an enormously valuable resource. I see people at PDAC or New Orleans or whatever running around with My Take. The name of the service is My Take. They've got My Take on their iPad, and it shows what I think are the pros and the cons. And they'll ask the company, well, what about this? What about that? I've seen this happening at live. It shows. So it's, it would be very expensive to hire me as your due diligence guy. But through My Take, you can sort of hire me as your due diligence guy. And by the way, we take requests from readers. Sorry for the crass commercial message, but you did ask. I think that's a great way to get familiar with my work. It's affordable. You can see how I think, see if you think I can help you with your portfolio.
Well, that is a great way to end this video. Thank you very much, Lobo, for your thoughts. And thank you very much for making the time to sit with me today. I appreciate you coming on Bald Guy Money.
Thank you.
I sincerely hope that you all enjoyed that conversation with Mr. Lobo Tiggre. And once again, Lobo, thank you so much for coming on the channel. What I want to say before we sign off is, for those of you who are looking for more Bald Guy material or content, please consider joining my Patreon to support me there. When you join, you get access to my weekly newsletter, my weekly video, which doesn't appear anywhere else except for Patreon, as well as to the Bald Guy Money mining portfolio. So please consider that. And before I sign off, as I end all of my videos, I just want to say to you all to take care of yourselves and take care of each other. Wishing you all a fantastic week ahead. Goodbye.